What is going on? Welcome back to Financial Journey. So today we are going to be talking about SoFi. When it comes down to SoFi, I do strongly feel that the recent acquisitions that they've gone through is largely misunderstood. So that's obviously Technisys and Galileo. So I do have King of Convictions here. He's going to be talking a lot about that and what that actually means for SoFi and its investors and why it's largely undervalued and definitely has a lot of upside potential. So welcome, King of Conviction. Thanks for joining me.
Yeah, man, of course.
Cool. So on a side note, though, make sure you guys are popping over. It's going to be a link in the description below to King of Conviction. Make sure you pop over there and follow him on Twitter. Big part of the SoFi community. In addition, make sure you guys are smashing the thumbs up and subscribing to this video. Helps push out a lot of SoFi videos. But getting right to it, King of Conviction. So what do you have for us for the two acquisitions? So Galileo and Technisys.
Absolutely. So Galileo and Technisys are definitely two companies that SoFi has acquired that have a lot of question marks behind them. A lot of people really don't understand their technology, myself included. And so last night I took some time and just did some D&D trying to figure out, what do these people do and who are their clients? And I was happily surprised to see that Galileo has over 100 clients, and Technisys also has about 60 clients. So the story goes that SoFi acquired Galileo in 2020, and Galileo is a processing platform, and the solutions they offer are digital banking, card issuing, payment processing, B2B payments. And they are just a really solid company. Their CEO, 𝗪𝗧𝗪𝗧𝗛𝗧, he does a great job at running the company. They recently did just expand into Colombia, which again is just one of those fintech frontiers that is really undiscovered right now. And so we're looking forward to seeing what they do with that. But some of the big name Galileo clients that I was able to uncover are Dave.com. I'm totally going to mispronounce this because I don't know how it's I don't know how to say it, but it's like 𝗖𝗢𝗧𝗪𝗧𝗛 or something.
Yeah.
They're a big one. Robinhood, Monzo, and an interesting one is Money Lion. The lineup is massive. I mean, there's 100 clients going from H&R Blocks, which just announced Spruce, which is also run through Galileo, to Samsung Money, which is run by SoFi, to Verizon Family Money, which I was shocked to see that Galileo had a client like Verizon. That one really was one that I wasn't expecting, and when I saw that really just as the name says, added to my conviction. And so Galileo is primarily in the North America, but they're pushing really successfully into Latin America. Like I said, with just adding into Colombia, that's really exciting for the company. And so Galileo, that they're pretty easy to understand once you get to understand their platform with the API technology. Technisys, however, is so much more than what you bargain for when you start looking into their website and what they can offer. For example, they offer a Cyberbank Core, Cyberbank Digital, Cyberbank Connectica, Cyberbank Marketplace, and Alliances on their website. And if you click on Cyberbank Marketplace, you see that they've built this Cyberbank platform where you're able to, as they say, take control of your digital experience based on industry standards APIs. They've added in things like Personix, Volante, Antoir, BioCatch, Dayon, Ocean Systems, OneSpan, Payverse, SendGrid, Twilio, Cedar CX, and DocuSign. And all of these marketplace pieces allow you to almost customize what Technisys can do for you, which I believe is going to be a huge part of fintech in the future. And so Technisys is in 12 different markets in 16 countries, but primarily they're operating out of Latin America. However, they're pushing into North America. So what I think is interesting about these two acquisitions is Technisys is primarily in Latin America, and Galileo is primarily in North America. And they're both pushing the opposite way, which is good because like we've mentioned earlier, they're also now able to cross sell to each other, which is going to allow for a lot higher opportunities for revenue. And also Galileo is able to offer the creation of bank accounts because of Technisys now, which is just something that we really didn't expect when looking into this. And so overall, these two acquisitions are really going to be building what SoFi has been naming the AWS of fintech. And so one thing I read is that SoFi intends to use Technisys software to serve out not just their own customers, but help a broader array of companies. Because SoFi already owns Galileo behind Wise, a money transfer service, which is what Wise is. Again, they're able to use that Technisys software to offer the creation of bank accounts to their 100 plus clients. And just recently, Technisys acquired a client called Credit Club, which is doing some amazing work in Mexico, which is, again, one of those financial frontiers, fintech frontiers, sorry, that is just really unexplored, and looking forward to seeing what revenue can be brought out of that. But before I close with what I have been saying, I would like to shout out two to three users who really helped me with just everything that I've been trying to do. Tradester JJ was super instrumental in helping me figure all this out. Throwable is a great follow on Twitter if you're looking for up-to-date information. And then also Tanner Mason, who runs Future Investing YouTube. He is a really also solid source. He did a full in-depth video of their most recent earnings, and I watched it on just a boring Tuesday afternoon, and he really killed it, going really in depth on even just the wording of the manuscript of the earnings as well. So yeah, just a huge thank you to all of those people. And again, as everyone says, none of this is financial advice, and we're just trying to figure this out. So
yeah, and do it all together. No, I like a lot of things that you said, and if you make sure you guys are putting in the comments below what you guys like about those two acquisitions, because I know there's been things floating around saying that they paid too much, and because that they won't potentially realize until 2025 or onwards, like any real sources of profitable revenue from that. I personally really like that, and the way that you said it, like that, even there's a lot of things I didn't know about that, and I really do like that. Especially like Latin America, that's a huge market. I think people underestimate that, and that's more of a big understatement as well. So yeah, make sure all the links are going to be in the description below. Make sure you guys pop over, subscribe or follow to all the individuals, and definitely it's just building this kind of SoFi community as well. So make sure you guys, again, pop over to King of Conviction, very big part of SoFi. So overall, though, today is a great day to add to that. And similar to what King of Conviction said, we are both not financial advisors, but today is largely down just based on retail sales numbers, a little bit lower than expectation. So it goes to show that basically consumers have less money, and obviously SoFi is very heavily reliant on those consumers, so it goes hand in hand. But still, long term, 2022 is going to be a big year, especially for a lot of those acquisitions that came through. A lot of positive, and even more so on the technicals though. We've been beaten down quite hard, but looking at some of the stochastic, for instance, we are currently at 6. That is unprecedented. That's so low, shows a massive amount of oversold. Even as much as I'm not really a fan of Jim Cramer, he even came out recently, said hypothetically that he's not going to put either a buy or a call on SoFi because he would have assumed that it would have reversed a long time ago, which I'm sure a lot of people did. especially when it did hit a low of around $8 back in mid-March. A lot of people were under the impression that was the all-time low. That's where it was going to be. We did show that theoretically this time around that there is a lot of strong support. So hopefully that does bounce off of this, but still a lot of fear in the market, largely brought on by the Feds. And a lot of the technicals, though, in the past at least, because again, technicals aren't really, it's a good representation of what might possibly come in the future. And looking at that, though, on that level, it goes to show there's a lot of different things that are all gray or great buying opportunities. So it's kind of in between, nothing really negative. So this goes back to the point we can easily reverse back. And even today, looking at some short information, and the only reason why I bring up short info is not necessarily because there's going to be a short squeeze, but shorts clearly are contrary to what we actually believe. So it's around 20% is what the short interest, 19.9. So that's very high for a innovative company such as SoFi. And this is why I still do SoFi videos, because I personally, I'm a big value investor, and SoFi hands down has so much value, offers so much future potential, massive growth, but yet it's on many different levels, it's just been manipulated, and I hate to see that happen. So overall, though, king conviction, where do you see SoFi going, let's say hypothetically even 6 months from now? So we have their upcoming earnings, I believe, in around May the 10th, I believe. So where do you see SoFi going to?
Yeah, so I think this next earning, I do think we will beat. I don't think it's going to be anything flashy, but I do think that the bank charter is, like they said, it's going to lower costs, and we're going to be able to drive in more customers because we're saving that money on different areas. If I had to put a price target in 6 months, I mean, there's so much going on right now in the world that highly affects the stock market. But I would like to at least see SoFi in 6 months around the 15 mark. I think that's a pretty reasonable estimate, seeing as at one point we were in the 20s and even close to 25. And that was before the bank charter. And I understand there have been different things happening in the market that have also caused that. But I do think that the acquisition of Technisys was a lot of dilution. And so I do think that's why we are a lot lower than where we maybe would be. However, I do think that the Technisys acquisition was extremely strategic. And if you look at what SoFi said when they acquired Technisys, they said they looked at, hundreds of different companies that do exactly what Technisys does, and they found that Technisys did it the best. And so I do think even at one point SoFi was trying to create what Technisys is doing, and realized that it would be better if they just acquired the company. And so, yeah, I think there's a lot of dilution going on in the stock right now, but I think reasonably 15 would be a good place to see the stock. But I think you're going to see a major jump in stock price in your 2024s and 2025s, because that's when the acquisition is going to be fully running on all cylinders. You'll have Galileo cross-selling to Technisys and Technisys cross-selling to Galileo, and SoFi doing what they do best, which is just creating things out of thin air. And one last thing I'll say about SoFi is, if you notice, they always seem to be first. They always seem to be first in everything that they're doing. I mean, the 1.25% APY, first of its kind, right? SoFi seems to always be on the front of the financial fintech frontier. And that's why I have such strong conviction in this stock.
Yeah, fair enough. Yeah, no, I like that. And I like your price target, because I'm a very big believer in, as much as retail investors and you and I think that we know everything, there's a lot of big institutions that kind of know a lot more deeper, and they kind of have a lot more good connections. So I always like looking at what institutions are doing, more specifically like the 13 Fs. So you can see what the institutions, what their actual average is, and they're all mid to high teens. And I find that very interesting, because they found significant value to the point where they're actually increasing their positions, many of them at least, at those levels. So yeah. I personally agree with you. I still think $15, like, that is where we should be at right now. That's where I see us going to, at least. Unfortunately, the market's just been hit, and a lot of people have been focusing, especially with the Fed's talking about interest rates going up so much. A lot of people have been focusing on that $4 billion that they have in debt. So I think overall, it is what it is. It's going to be a long-term investment, similar to what you said. 2024 and 25 onwards is going to be very profitable for SoFi. Just in the meantime, you just have to have thick skin and realize it is, for any innovative company, not necessarily just SoFi, is a very bumpy ride, but it's going to be profitable in the long run, right? If you have, like you said, well, I guess based on your name, King of Conviction, like you need to have good conviction, basically. As far as my price target, I see logically we should be at between the $12 to $15 range right now. So given 6 months from now, assuming that there's going to be a nice rebound in the economy, you would assume at least, would be around 18 to 20. That's how I see things. But again, I could be wrong. We're not financial advisors, so do your own due diligence at the end of the day. So, King of Conviction, was there anything else you'd like to bring up?
I don't think so, man. It's been a pleasure.
Cool. Well, I appreciate you coming on. So again, make sure you guys pop over to King of Conviction on Twitter. Give him a follow. Very good, obviously, as you can already tell, very knowledgeable and does a lot of good due diligence and all that fun jazz. Make sure you guys are smashing the thumbs up, subscribe, do all that fun stuff. Greatly appreciate that. But with all that, let's all make a lot of money on SoFi.